Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone a couple of minutes past midday here, making it 1100 UTC. Seeing lots of familiar and friendly faces on the stream, as well as some new people as well today. So a big shout out to everybody that's taken the time to watch this live, and also to everyone that's going to watch this on recording. So first of all, a few good mornings. Hans, see you on the show. Good morning, my friend. Ray Valentine, first time. Welcome, Ray. Hope you find it of interest as well, and the same for you as well, Colm. Very much welcome, guys. See some old friends here as well. Touche, Nitpar, absolutely fantastic, and Sebster too as well. So before I get too rambly, let me just make this full screen and let's dive straight in. So let's get our session breaks off just for a second, which are just the daily dividers for anybody that doesn't know. For anybody that is new to the stream, Mondays we focus quite heavily on Bitcoin. We will take a look at some other assets as well most of the time, but really we try and kind of focus Monday on education. I personally quite like to watch Monday's range play out before I start trading the week ahead as well, be that on crypto equities or Forex. So on Mondays especially, but Wednesdays the same. If you've got any questions about anything, just please do feel free to pop it in the chat. Yeah, don't mess around. Just get it in there. This is what it's all about. Mondays is for learning. Mr. Eam, hello, my friend, and Yasir as well. Welcome, welcome, welcome. So, guys, what are we looking at here? Let's zoom out a little bit and get some higher time frame context, shall we? Perfect. Right. So I like to start on the weekly, especially on crypto sometimes, or actually quite a lot of the time on traditional market assets. I will start on a higher time frame, like could be something like a quarterly, right, or a monthly chart, purely because we have so much more historical data. Hans, yeah, GBP USD actually something that's on my radar already for an FX trade this afternoon. So yeah, we certainly will, mate. If I forget as we move towards the end of the stream, please do let me know. But we'll definitely make time to look at that. Sebster, quick question. And Mr. Eam as well. Big heart right back at you, buddy. Moral, hello, my friend. Welcome, welcome, welcome. So Sebster, what was up with the markets over the weekends? I know we're used to it, but those dumps were pretty heavy. Luckily, I rode them both ways. Trading is getting much better. Fantastic, mate. It's been really good to see you come along in the way that you have, which is always a joy to see, to be honest. You know, the markets have been particularly volatile lately. They've been heavily news driven as well, we need to remember at the moment. So I try not to pay too much attention to the fundamental side in terms of news drivers. Right? I'm very lucky to work and be a team member at the Bird Nest, right, where we work together as a group of traders. We have a fundamental team who do keep me up to date with stuff that's going on. However, typically or historically throughout my trading, other than the major news events, and something I would recommend to everybody to keep track of that, right, is we update the membership every Monday or at the latest on a Tuesday with all the key news drivers for the week. But get yourself like a free account over at like Financial Juice, yeah? So there's a few out there. I've just popped it in the chat, guys. No association or affiliation, right? They don't pay us for anything. It's a really, really good news aggregator. So you can go on there, find all the key news events for the week, and you can filter them out by priority. So I have mine, for example, all set to red list priority. So that focuses on things like earnings events that are coming out. You have obviously key news drivers like anything to do with the FOMC, rates decisions across Europe. Obviously, the US is the really, really big driver for the market, PPI, CPI. Which it will keep you up to date with. However, obviously, if you are looking to trade currencies, then anything to do with Eurozone news can be really, really important to catch if you want to counter trade, you know, Euro USD or Euro GBP, for example, which we'll take a little bit of a look at shortly. But just kind of looking at it from this perspective, if I've zoomed out here, and actually let me just clean this up a little bit further, get rid of the daily analysis as well. So this is exactly what I like to do when I'm starting to look at a chart, right? Now we can look obviously at historical price action as well, which is fine. You know, you can really map this far back. But for me personally, I'm looking for intraday trades, right? Or kind of shorter term swing trades, especially in the crypto markets, especially at the moment, right? Now, I know, for example, you look at, say, Crypto Burb, yeah, and, you know, he was long from here, right? because he's a trend follower. Okay, so again, I know I rattle on about this week in week out, but it really is important to understand what type of trader you are. Yeah, because if you're someone like me, for example, who favors a lot of range trading, day trading, now my particular system, which has been refined over the years, being part of ICT's core mentorship many years ago, I've learned an unbelievable amount from people like Trader SC. And my boy Trader Dank as well, who I love to bits, I still think is probably one of the most exceptional day traders I've ever met. Um, the thing that all those people have in common is they really, really, truly, deeply understand their niche. Yeah, the time frame that they're trading on, what their triggers are, right, and the key drivers that they're looking for. So, for me, what I'm trying to do, or what I've done throughout my career, is find systems that I can overlay on different time frames that allow me to execute. So, I'm going to run through that with you guys today. We're going to do a little bit of a top down. We'll start on Bitcoin. We'll move across. We'll take a look at GBP USD for Hans as well. And I think Seb wanted to take a look at ETH, which is our standard anyway. We'll make time for more requests on Wednesday, guys, but at the moment today we're going to focus on those three. Yakuza Kana, hello, my friend. Good to see you as well. So, weekly, what are the key things for me here? So, the way that I'm looking at prices, how price is searching for liquidity, right? So, we're going to come to key highs or lows, right? And if price finds acceptance above or below those highs or lows, then we're looking for price to move higher or lower respectively. However, if we see, a deviation, a fake out, meaning that price kind of moves beyond that level, swing fails it, closes back beneath it and starts to break down, then we would look for reversal plays. It's good to see you as well, mate. It really is. So let me give you an example, and we're going to break this down from weekly to daily, down to the hourly, and then down onto our execution charts on the minutes. So we've got this key low down here, right? So price comes down. Why is this a key low? Well, look how aggressive this drop has been, right? Now, when we have a drop like this, often, personally, I'm looking for a mean reversion trade, meaning I'm looking for at least a decent correction back up, right? Things just don't go parabolically in one direction for really, really long periods of time. And we can see here, if we take our, from this drop until the stop down here was a 63% drop, right, that took place over 77 days on Bitcoin, right? That is a big, big move, meaning that when we see or get the opportunity for a sign of reversal after a move like this, there's an expectation that price will start to cool off a little bit and it will revert to mean, meaning that it's kind of going back a little bit more towards where it came from because it's stretched so far away from it. You can also use this principle with moving averages. For example, what you will notice with a moving average, I don't think I've got one on here at the moment, but let me just let me add one in to show you this very quickly. What do we want? So if we pop this on here, right, and let's just say make this we could make this a 50, for example, right? Now, what you'll notice is here, or this is a really good example as well, wherever you look, when price really starts to get away from this, yeah, so we notice you've got a long distance here, it's becoming overextended, right? It's becoming overbought. In this instance, what we're looking for here is quite simply a run on liquidity, yeah, which we see above this high, yeah, and then we're looking for price to break down from here. Yeah, we get a strong close below here. Ultimately, price sells off, searching for liquidity, which is resting below those lows. Yeah. Now, when it comes to picking highs and lows, and people say, well, how did you know if you're going to pick that low or that high? I mean, you never really know. Yeah. But if you're looking at a chart, whether it be a weekly, a daily, anything like that, right? If you're looking around here, you can pick out these key liquidity levels, right? And what I'm always trying to do is say to myself, okay, if I was an institutional buyer, if I was a major player in here, and these type of people aren't operating on minute charts, in truth, not in my opinion anyway. These people are operating on higher time frames. They're institutional investors and buyers and sellers. They're looking for clear and obvious places to buy and sell, right? Backed up with a lot of data. So when you see these, key lows, key highs run, yeah, or you get elements like this, or you get levels like this that are run here, then what we're saying is, look, if price is going to push lower than this, yeah, if price is really looking to seek out lower prices, then what we'd want to see is price really show a move below this, not revert back above, right? But do our classic support and resistance flip, yeah? And then from here, we quite simply look for the break of market structure. which then allows us to trade it lower. Okay. So an area like that would provide a really good opportunity. Why? Because price has come down, set this low. It's come back out and it's finding resistance where we previously had support. Then, for me personally, I like to use confirmation setups, meaning that I'm waiting for price to hold here, because until we know that, this could be a deviation. Price could be running the liquidity below these stops, using it to fill the orders of major players, coming back above and then expanding higher. As it turns out, that's what happened here. But let's use another example, right? This. So what we get here is price comes out and runs the stops below this low, taking the liquidity, right? Now, the reason that we're saying taking the liquidity here, and I will come back to the mean reversion in a second, guys. I know it feels like I'm going off on a bit of a tangent. But it's because liquidity stop hunts, liquidity runs, whatever you hear them called, market makers, major accounts, everything, these are the kind of areas that they're targeting, right? So think of it like this. This low here, people that were long here have got their stop losses under here, yeah? So what you get is you get a big build up of liquidity under here, yeah? Because for people that have gone long here, their stop losses, here are sell orders. Yeah, they're forced market sell orders, right? Because they're buyers here, meaning if they're wrong here, they're selling back to the market at a loss. Now, what that does is that creates a lot of sell orders, meaning that if you're a major player, and you're looking to go long here, then this provides a golden opportunity to do so. Why? Because you've got all these ready-made sell orders to fill your buy orders, and then price can expand higher. As it happens, we didn't get that reversal situation. What we got is price had a strong close below, right? Now, I use the term strong close, it's very much my own, right? You want to see a good portion of the body, or I do, below. But then the one thing that would have me a bit hesitant here was this wick, as price is getting bought up back towards, right? So we're looking here at like a pin bar candle, which can often be seen as a reversal candle. However, a dear friend of mine and a fantastic colleague, Pedma7, who's a systems trader and algorithmic trader, and one of the brightest people I know, is unbelievable with testing data. And he did a brilliant study recently on how effective candles such as pin bars, engulfing candles, etc., are with the trend and without the trend. And actually, they're so much more effective with the trend. And that's what we want to be careful of. So in a situation like this actually provides us a prime example. We have 1, 2, 3 bullish pin bars here. That's the smaller head at the top, followed by a long tail and a very small or no nose, which means the tip sticking out the other side of the candle. So if we look at it here and we say, okay, so we've got in this down move here, bearing in mind our trend is bearish, just in this move here, this leg down, this kind of a pin bar, maybe more of a doji, but even if we discount that, we have 1, 2, 3 bullish failed pin bars here, followed by this bearish pin bar, which led to the cascade lower. Okay, so that's something to remember. However, as we're looking at liquidity, all we're saying to ourselves is, look, if major players wanted to step in as buyers here, we would expect to move quite sharply back above this level. And if price comes back above this level, then it's not really showing us the weakness to break down further, okay? So remember what we said as we were looking at it back here. We were saying we would want to see price underneath this level, and we can see the long downside wicks here showing absorption, showing that buyers have stepped in here and price ultimately went higher. Now, contrasting that, as we broke below this level here, the first thing we did was we closed below the level, which we failed to do over here, which I'll just draw in just to make this a bit clearer for anyone. Yeah, so we see we had this tiny little wick below it here, right? But ultimately there were no close, right? And there was certainly no hold. We contrast that to here, we can see how price cascades below, See how it holds here, holding above support, good sign, building a base, price moves higher. Here, it slices through very easily, and then the small little base that we build here is underneath price, giving us the expectation that price is going to head a little bit lower, okay? And just closing off on the mean reversion point, using our moving average as the example, when price moves far away, it tends to snap back to the mean, which is the moving average. Price moves away, it snaps back. Moves away, it snaps back. Okay, we see the point here. Away again, it snaps back. Now we've had this very extended period here. The price has come back. Well, now we've broken through it, right? Leaving this inefficiency here. which is the fair value gap that we've been talking about for several weeks now in terms of price, pulling back into that and looking to see if that then provides our options for long setups. Now, I personally don't just blindly long these areas. What I want to do is see price come into these areas, move down to a more executable time frame. All right. So for this just quick example, I'm going to give you, we're going to move down to the 4 hour. Okay. And then what we're looking for here is for price to really give us an idea that it's looking to move away, right? So look, price comes in here, we get this reaction higher, right? Now, what we can see here is we've got our high time frame level, yeah? So we're saying when price interacts with this weekly fair value gap, and we would decant this onto lower time frames, which we'll look at shortly, then depending on what your trade setups are and what your triggers are, for me, I'm looking for price to engage with a level like this, right? And then I want to see clear market reversal, all right? I like to see some liquidity taken. So we can see here we've cleared out liquidity below these lows. Yes, would have been nicer to get a purge into this. However, the fact that when we look at the price action, right, we can see the price made an aggressive move lower. Something that I like to do, or something I like a lot, are inverse fair value gaps, right? So why is this an inverse fair value gap? Well, what we can see here is price is leaving these bearish fair value gaps. One here, one here. Now, once we've run liquidity here, the expectation is if we're looking for price to go lower, then this fair value gap should hold. We shouldn't be closing above it, and then we can look for our short setups within here, right? Ultimately, what happens? Price has a close above, dips in to retest this area, and then moves higher. So that allows us to then take intraday long setups within here to liquidity, right? And for me, if we're looking to go long in here, yeah, so let's just circle that for a second, then our easy liquidity targets are resting around here, right? And what we'll see is we ultimately ran this the highest, yeah? Then what happened? We've got this situation. We ran liquidity, we've got a clean low, right? We broke below this low, right? Leaving a fair value gap. Just tag that onto there. So once again, this isn't an inverse fair value gap. Why? Because it's a bearish fair value gap that when price comes back and engages with, sells off here, comes back into here, sells off again. Where to? Clear and obvious resting liquidity first below this low and then below that low. All right. So that's the premise of how I look at my trades. Okay. I'm looking for the market to give me indications on where it's going to move. I don't hold, I'm never ever married to a bias. And what I mean by that is that I don't ever want to enforce my will on the market. Right. What I want to do is I want to try and work out on a higher time frame where price is reaching for, and then on a lower time frame, work out a trigger plan for if price gets there, and then looking for certain patterns that I would want to do to execute. Excuse me for a minute, just going to take a sip of tea. Perfect. Right. So all of that is hindsight. Nice and easy when you've got a chart in front of you and you can pick all the data sets out. So where does it leave us at the moment? The reason we were really interested in this weekly fair value gap, like I said, is looking for price to draw in here and give us a really good reason to go higher. Now, not something you'll see on my charts very often, but something that I do use. Right, our diagonal support resistance lines. So we can see here, we've got two really clean ideas. Yeah. We're saying to ourselves, if price is reaching higher, and the target for me is moving into this fair value gap higher up, right? So just again, and guys, I apologize to anybody that knows this or people that have been on the stream before. Like I say, it's just for, we've got some new faces on here today and it's quite nice to kind of run over it. But guys, if you've got any questions, please do pop it in there. If you want to move me a bit quicker, please don't hesitate to tell me either. So remember what we said, yeah? Clear and obvious liquidity, right? So if I am a major account and I'm looking for this, and in my mind I'm saying, okay, on a higher time frame, where do I want to move price? Yeah. So this high here, and actually in terms of a local low would be this one on a weekly scale. And then below that, ultimately, we're then looking to knock off these lows as we go further down. But remember what we're saying here. We're respecters of market structure. We want to be trading with the same directional bias as the institutional traders, right? And if institutional traders are pumping this market long, that's where we want to be. Yeah. We're talking about an old saying that I learned off a very old friend of mine, which is the trend is our friend until the end. Yeah. And always so humble, mate. I know you know more than you let on, my friend. So look, clear low, clear high on a weekly scale doesn't mean that if we break this is what we're targeting. We're just trying to work on, okay, on the higher time frames, what's drawing price? Yeah, what's pulling price in? And for me, this high up here, that's not a realistic close target. We have this high here as well, right? That's a key high for me because first of all, look, we set this high here. Look at the long upside wicks showing the sell pressure. Remember I said earlier as well about this pin bar candle which drove price lower. A pin bar followed by an engulfing candle, in this case, bearish pin bar, bearish engulfing. For me, that's something I'm really, really interested in, right? Because it's often driving price lower. So, ready-made target above, and we also have this fair value gap, okay? Now, without kind of going into too much detail on this, I also don't want to let you guys waving out. Erica, hey buddy. A bit late you're here. Always better late than never, my friend. Right? So you see the range that I've put in here, and let me just make this. Actually, let me do this the other way because I always do this cockeyed, and I don't want it to put people off. Right? So this is a premium discount range, right? This is teaching of ICT, and this always really, really resonated with me. Yeah. Now this is our trading. Yeah, this is our trading range, or basically what we're looking for is the price leg. Yeah. So price high, higher low, higher high. Briefly broke market structure here. This swept liquidity above these highs, breaking down, ultimately taking liquidity below these lows, and we've then broken market structure here after a sweep of liquidity to the upside, meaning that for me, this is the leg that I'm interested in, right? So on a weekly scale, when we're in the bottom half of a trading range like this, yeah, we're favoring long setups. When we're in the upper half of it, we're favoring short setups, yeah? This is known as premium. This is known as discount. We want a short from premium, which is why the top is red, and we want a long from discount. So whilst price remains in this area, yeah, something that's really interesting for me, and as I expected, now we'll take a look at on the daily chart, is I'm just going to draw this one in as well, right? Which is another weekly fair value gap. So for my fair value gaps, what I'm doing is FVG is obviously the abbreviation of fair value gap. The W stands for the time frame, in this case, the weekly. If it was D for the daily, or if it was hourly or minutes, etc., it would have an H or an M, respectively. So why is this of interest? Well, if our theory is this, right? Price is still bullish, yeah? Higher highs, higher lows. Higher highs, higher lows. Now just tweaked above and set a higher high. So I don't want to be fading this kind of strength, yeah? Now last week, fine, was a bit of an inconsequential doji, but it did set us a weekly inside bar range, which we can look at later. However, we can't be thinking just because price is up here that it's just going to drop like a stone. And that's where we have to be careful with the news events that we take on board as well, because we see a lot of FUD. And you know what? It's just simple supply and demand, right? I don't know if anybody's as old as me here. I've been rewatching an old series called Deadwood recently. Ian McShane is one of my favourite actors in an old British sitcom called Lovejoy, right, which was just awesome. And Bram, hey buddy, you're very welcome, mate. I'm just going to go off on a little rant for you now, so you kind of hopefully grow to not hate these too much. But look, in Deadwood, it's about an old Western mining town, right? And basically, the reason that I'm bringing this up is because the same principles that exist today on digital markets, cryptocurrencies, etc., exactly the same as if we go back all that time to the simple gold rush era. It's supply and demand, and it's the tricks that people use to induce buying and induce selling. In this particular episode, there's some really, really big players moving into town. They found this town called Deadwood that's been set up, a really backwater town, lawless town in the Western times. And basically, these gold prospectors have found all these claims, and it's a load of little individual people who are panning for gold in the mud, right, and in the rivers. Now, what happens is major corporations start to move in. Now, if major corporations start buying up everyone, yes, Johnny Rico, you know, Deadwood was great. So the old corporation can either move in and buy everything at face value, but what's going to happen if that happens, right? These big players start moving into town, and even the less bright amongst people there would be thinking, hang on a minute, why are these guys interested in buying all of this stuff? Why do they want it? In my mind, I'm thinking, well, you know what? I'm not going to sell. If these major players want it, why would I sell? There's obviously something here, right? Now, if you reverse this, right, and you roll into town and you start spreading rumors and lies, right, and you start saying there's no gold in the ground, or all these prospectors have been in and they already ripped it out, right, or there's something underhanded or something towards it to set panic alert for these people to think that their claims are worthless, then what happens is they start selling to anyone for anything they can, right? Sound familiar? What happens in the ideas of when people start panic selling their Bitcoin or crypto or any asset, yeah, because a news event comes out. You know, the last bull run, China's banning crypto, China's banning crypto. Tiny little pullback and the market rockets. Why? Because it's the art of manipulation. It's the art of the smartest, biggest players out there trying to position retail where they want it. Okay? So, that little rant over, and by the way, John McDonough, loved him as both Al Swearingen and Lovejoy. I'm obsessed with Lovejoy. I even have, I'm just getting some work done in my office, and soon I'll have the camera up so you can see some bits. But I actually have a signed cast photo from all of them from from Lovejoy. And a Lovejoy t-shirt. That's what a geek I am. But when we look at it in things like this, it really, really makes sense for me how I trade, right? Meaning that news events can cause fear, understanding. We get it at the moment with centralized exchanges, right? For me, these are the moves that are being used to flush people out of the market so that institutions can buy. Yeah. Now, if I'm wrong, I've always got very limited risk, but I've got big upside. And this is where we come to our risk to reward. Okay. And that's where our premium discount ranges come in. Yeah. Meaning that if I'm long from down here, yeah. So I'm going to take a long setup and say my worst case scenario is, let's say I'm long from here. Yeah. Now, my upside here is 1-for-1. If my downside is always the far side of the range, yeah? However, this premium discount range was set here. So I can go long anywhere from here, yeah? Meaning that I've got a 4.5 risk to reward, yeah? 4.5. Now, if I do the reverse of that and I decide to go long here, I've got a 0.51. Yeah. Now I know people will say, well, yeah, but you wouldn't put your stop there. You'd put it below here. And that is just an example, but you can see what I mean. If my downside is here and I'm longing from up here, the risk isn't in my favor. Yeah. However, if I'm shorting from up here and I know that I'm wrong here, yeah, but my potential upside's all the way to down here, all of a sudden I've got a better risk to reward. So what does all this absolute nonsense that I've been rambling on about mean? Well, no, first of all, it's not nonsense, but I do appreciate it's a lot to take in, right? All we're doing is we're overlaying the different principles, yeah, to give us an idea on where price is heading. High time frame direction, we're currently bullish, yeah, meaning that we have to maintain a bullish bias. What have we seen consistently with price, right? We've seen a breakout, right? Then we've seen price doing what? Leaving an inefficiency, a fair value gap, price breaking out, yeah, then returning to that fair value gap before continuation higher. So what does this return to the fair value gap do? Well, it takes out people that were late longers here, yeah. So people that went long here, they were like, I've seen the breakout. Here's the retest. Right, I'm going long. Stop loss below here. This move down here, which incidentally again is a bullish pin bar, yeah. This move down here takes out all of their stop losses, triggers algorithms and breakout traders in the opposite direction, uses all of that liquidity to fill the bags of major players, to then we get these big expansive move higher. Yeah. What then happens here? Price consolidates a little bit, dips back down here into the fair value gap before pushing higher again. So while we're favouring this continuation pattern as we move higher up, drawn by the fair value gap above us and the untapped highs, then what I would like to see, which we'll look at just in a second on the lower time frame, is price to draw back into this fair value gap here before moving higher, right? So I hope it's clear in terms of how I'm looking at this and how I'm thinking about it, right? Meaning that my weekly bias is bullish, yeah? However, as we'll see as we move down on the lower time frames, that doesn't mean that our lower time frame bias nor that our trade setup has to be bullish. For example, when price was up here, yeah, and we had this fair value gap below, there's nothing stopping us from looking from short term short confirmation trades, yeah, into this key level before we're looking for reversals. Yeah, it's all about how we interpret the different time frame that we're on. Okay, so now we're down on the daily. Something that can help us in terms of looking for these breakouts, yeah, are our sloped or our diagonal support and resistance. Yeah. Now, personally, there's different ways you can draw these lines, right? I personally like to see price either anchored to a wick, yeah, so you can use that with your magnet tool. But then I don't like to cherry pick here, meaning that I wouldn't allow this to violate the body of those candles, right? I would need it to respect the body of those candles. Now, if it violates it here, once I've drawn the line, no problem. I'm then monitoring to see if this is a breakout, yeah, or a fake out or a deviation, right? And lo and behold, price expands higher, leaves the inefficiency below. And as we can see, if we just zoom in really, really close, how we just dipped into this here. Yeah, we dipped into that fair value gap and then price expanded higher. So you can see what we're doing is we're just overlaying the same principles level to level as we start moving through the charts. So I'm just going to get rid of this. Oh, no, I won't. I'll leave the weekly one there for a second, right? Because what we're going to do now is we're going to overlay the daily data. Okay? And let me just get rid of these for a second because these are our 4-hour ones. There we go. So we can see the fair value gap weekly, which is this one, contains two smaller daily fair value gaps, right? So we're going to delete the weekly one here and we're going to refer, yeah, to our dailies. Now, remember what we were just talking about in terms of premium and discount, yeah? So, as this now being our dealing range, yeah? This expansion higher at the moment while price consolidates here. For me, on an intraday basis, I'm favouring short setups here back down to this fair value gap or ideally this one. This one is the ideal because this one's down in discount, yeah? We can also see here that with this big leg higher and this higher low, the price can kind of afford to really correct down here, right? You know, if we're setting up high, we can come in and set a higher low down here. 1 second, guys. Is that the delivery? Sorry, guys, just expecting some. No, it's fine. Got a new mic cable being delivered today as the other one's got a bit raw. So if we pull back to this fair value gap, I am all in the business of looking for long setups back above, right? So what do I do if we violate this fair value gap? Mum phoning. No, I tell you what, Hans, that is always on silent. I love my mum dearly, but she is, yeah, she's a tricky player, mate. Like trying to mark Messi in his prime. Um, so if we get that pullback to here, then we look in here on a lower time frame, we start getting some long setups, then I'm really heavily favouring longs here. Now, if we get the same move into this fair value gap and start to get the same, then I would take long setups here as long as I get my triggers. However, I would do it with a reduced position size, right? Because reduced position size for here allows me to limit my risk. My highest probability setups are from here. Yeah, I have a lower probability setup from here, but I have to respect the strength in the trend. All right. So I can just reduce my position size and then over time, it just helps me manage it out. So what if we don't get the pullback? Well, let's look at what we do with our levels, yeah? So first of all, what happens if we do come down to this box and we flip it, you know, like we were looking at before with the breaker? Well, if we come to this box and we slice through it like a knife through butter and we revisit it and then we get our breakdown pattern here, then I'm favouring short setups, okay? Why? Because we've done our inverse fair value gap. Yeah, remember that we were talking about earlier, we're looking for that to be flipped from support to resistance. And that's how I'm treating every level that I move through, all right? So at the moment, we can see the same principle played out here, all right? We came into this high time frame level, yeah, which was this high that we marked out. Price engaged with this, and now we've had a slight pullback. But we've set this high, Yeah. So if price wants to show strength here, we need to see it on a lower time frame, right? On an executable time frame. So all we now do is we move down to our 4 hour. Now, if I will see the stuff that we did from the stream last Wednesday. Here we go. So this is exactly what we had on the stream last Wednesday. Let me just get rid of this so to clean it up a little bit. We'll look at Litecoin as well briefly because we covered Litecoin on Wednesday, which I actually didn't get on board, unfortunately, for just a couple of different reasons. I was very, very focused on traditional markets, and as a group, we did some really, really good TA on Wednesday on the live show for Litecoin, which we wrote out a setup that we were looking to take. I didn't take it. Full disclosure, I never lie about the setups I take or I don't. But my God, it would have been a very, very nice setup using these same principles. So that's why we want to revisit old TA on here, right? So I like saving it from the different sessions we're on to see what we could do. Now, our premise here was that price is coming up, right? And we want to see it hold this fair value gap here, right? Now, as we can see, as price goes along here, this has just been chopped and invalidated and absolutely done to pieces. So why weren't we looking for long setups here? Well, quite simply, we didn't have the risk to reward needed to push up for this high, which is the key high time frame level that we're watching for, right? What we want to see is a strong move above, yeah, and then a retracement to a level that we can get involved with going long. So let's just pop our session breaks back on, right? So you can do that. Just go in your chart settings for anybody that doesn't know, events, and then session breaks. You can set them to solid lines, or I prefer them as dotted lines so they're a little bit less obtrusive. And these just basically section out our days for us, yeah? It allows us to track prior days high, prior days low, and key areas of liquidity, which we'll touch upon very briefly as well. So, if I now drop down to the 15-minute, right? What I'm looking for from price is conviction, yeah? Meaning that what I want to see, and quite often I'll use fair value gaps for this, right? So, we move back to here and we take this box, yeah? For me, there was only one move here that really gave us the opportunity to get involved and go long, and we didn't get a retrace for it, right? Which was this one here. First of all, it happened in Asia, right? Which is unfortunately no good for me because it's a lovely session to trade if you've got your system set to that, but it's literally the middle of the night for me. But what we're looking for here is this strong move above, yeah? And then we're looking for price to come down. So you see how we got here, right? Price had this move above, not really that impulsive, but as it starts to come back down, you notice the structured way that price is dropping, yeah? It ultimately comes back down, finds these fair value gaps in here, but we just don't get that momentum play higher. Now, what happened during Asia here that was really interesting to me is we got our inverse fair value gap here, meaning that if we were looking for lower prices, we would have expected this to hold, yeah? So we would have expected this to suppress price here and for price to break down. Ultimately, when we had this move higher, we had the expensive move higher, we flipped this fair value gap, and we've also left this fair value gap in its wake, yeah? And this one here. So what we could have taken as the trade, and I'll tell you for why we would take this one, right? For me, I would be looking to take this trade for two reasons. One, we've had an expensive move higher. Yeah. We can see the price has retraced down here to discount. Yeah. Meaning that we can take setups from here, targeting liquidity higher up. Ultimately, we would have been targeting above this high. We would have been looking on the lower time frames, maybe for an order block in here. But we can see we probably would have got maybe to a first, maybe to an initial target, possibly, taken a little while. We would have booked a very small amount of profit to cover fees, but ultimately the trade would have been retraced here and taken out at break even. Now, this is testimony to what a choppy bit of price action this has been, right? And when we reverse out and we look at the week and how the week played out, yeah, what we can see is that after we had a really big expansive week the week before, price has ultimately just come and chopped about in a range. Yeah. Now, if you were going to look to trade this as a range, yeah, then personally what I would be advocating here is trading this as an expansion range, yeah, or what I would call an impulse range. So there's different ways, obviously, that we can draw ranges, but something that I've found really, really helpful in my career is looking for these big impulse moves, right? Because often after these moves, we get consolidation, yeah? And what you want to do is you want to see price come up and set a clean high and then come down and set a clean low, right? That then engages with the midline. So with this example, price came up, set a clean high, set a clean low, but then blew out at the top of the range, all right? So we then set a new high. We're then looking for a clean low where price can then re-engage with the mid. Yeah, so we just simply mark up the high. Right, now this is going to look really messy, right? But bear with me. So this is our range. Let me just hide this fair value gap so that it gets out of the way. Now, what has happened here? Ultimately, price has come up, set this high, come back down, set this low, rejected at the midline, yeah, and then come back down to the low. And you might look at this, and I'll just get rid of the session break so it's a bit clearer. You might look at this and think, that's a horrendous range. I am not listening to anything this idiot says anymore, right? And you'd be well within your right. However, let me just give it a little bit of context for you. Now, once you have this move lower down to here, there's absolutely nothing wrong with you extending this range down, yeah? And then ultimately you would realize that what you've got here is price action that's moving, deviating, failing the midline, selling off where? To liquidity lower down. Small deviation here, price moves up for liquidity above the midline, deviation below, sells off again. Deviation below the range low, up to the midline, price breaks down from the midline, right? Comes back above. Would be known as a double deviation or a double fake out. You often see these before very, very aggressive moves lower, which are designed to flush out the market. And there we have a tradable range. So now our question is, if we're looking at this from a range perspective, is this the deviation above the mid? Yeah. So what do we want to see if it is? We'd want to see a clean break below here, a retest of this, and then we would target the range low, yeah, via internal liquidity targets, which for me would be that low there. Although this is on Bybit, I'm not sure actually that other exchanges had the same wick, right? But very quickly, for those amongst you that are like, hang on a minute, BC, that wasn't your bloody range though, was it? Your range was here originally to here, which it absolutely was, yeah? Because that was the move up, the impulse move up, then I'm looking for a clean low, and then I want that low to engage with the midline. Before we have further price action down here allowing us to adjust our range, this still gives us a tradable range, right? Now, let me move this up to here. So, here's our range, right? Now, forget about the price action that's taking place beyond this. The range was set here, right? Now, whilst the range is respecting this, yeah, so we set it from here to here. Then, interaction with the midline, first deviation, sell off to the midline of the lower range, yeah? Price comes underneath, retests this, sells off to the lows, yeah? Deviation, price comes back above, up to the halfway, back down again, deviates this, sells off again, right? I won't go through the whole thing, but we can see how price is constantly in flux between trying to gain acceptance above a level, yeah, or finding rejection, all right? Whack, hello, my friend. How are you? Some really interesting points brought up by you, my friend, I thought, in the Nest chat. Thank you for that. That was really, really started a really cool conversation. So, looking at it on this level, right, on a range level, we're using exactly the same principles, right? So whether we're overlaying this on a range, whether we're overlaying it on a support and resistance level, whether we're overlaying that on a fair value gap, we're looking for price to merely find acceptance above or below the level, yeah, in which case we then play the strength that it's showing, yeah, or we're looking for rejection. Now, when we look at these levels, these upside wicks here, yeah, we can see here with these upside wicks, the selling pressure as price comes down. We get the close below, price then searches out liquidity where? Below the range low and ultimately the internal targets, yeah? Even as you leave the range set like this, you can see the constant flux of price, all right? Now, I'm not going to go into tons of detail on ranges today. I'll be happy if it's of interest to everyone to really run through it. I did a workshop about it for Web3 in Berlin, right? And for me, price is always moving level to level. My good friend, trader Dank, and I have had stayed up many an evening talking about this. Price is constant pursuit, looking from level to level. So with that in mind, we're going to do a couple of things. We're going to finish off today's session. Last 15 minutes, I said we're going to take a look at GBP USD and we're going to take a look at ETH as well. So while we're on the crypto theme, let's have a very quick look at ETH first of all. And then we're going to look at GBP USD, and I'm going to discuss with you guys a couple of setups that I'm looking for this afternoon. All right. So while this loads, I'm going to take a sip of tea. Yeah, it's a good question, Nick, actually. We're just waiting for them to send us the information over. I had a gentleman ask me on the stream last week as well, and someone on Twitter. So I've contacted them. I'll chase that up again. I know I was very lucky to go on the main stage with Burb, a guy called Pavel, who runs this amazing hedge fund called Nomad Fulcrum. Milky and Pedma7 as well went on the panel show on the main stage, which I think is on there along with all of it. But at the moment, we can't find the web workshops, but they were all filmed properly as well. So we will take a proper look at those, but do please remind me. Oh, GBP USD short doing well so far. Yeah, love it, man. The pound was in trouble at the moment, especially against the dollar. Well, especially when you've got the country being run like ours. Now, before I go on too much, look, when I'm talking about balanced price ranges in first fair value gaps, do make sure you check out ICT's material because he is the originator of this. I was just a student of his that used this in my trading today. But when we see the crossover of these, the bearish fair value gap with the bullish one, or a busy and a sibby, as ICT would call them, then we look to these to hold as support, right? So we see here as ETH drew down into this here, can see what an important level it was to rebalance, all right? So let's zoom out on ETH. Right, perfect. So on a weekly scale, we're looking a little bit similar to Bitcoin here, right? If I was saying to myself, what's kind of capping the market at the moment in terms of a level, then this high is really interesting, yeah? Because price came down, ultimately found rejection here, sold off now, deviation, right? Price comes back down below, retests, and now starts to sell off again. What's currently supporting price on a weekly basis? I would say it's this weekly fair value gap. Right now, if we look at that, price has come in, and then we've had the slight expansion higher. Now, what we've got here that's really interesting, look, we got this bearish fair value gap, like we were just literally talking about a few minutes ago, that's now going through a bullish fair value gap, which is always something of interest. Bearish fair value gap, bullish. We've now set this one here. So I'm not saying we pull right back down to this immediately, but this is a really key point of interest for me because in terms of bullish continuation, if we did get something like this, yeah, and then on the lower time frames, we build back that bullish market structure, then I'd be looking for price to drive into these levels here, something like that, okay? In terms of the draw higher, we obviously have our weekly fair value gap above. We'll focus on this one first of all, because this is the closest, so this is the one of the most interest at the moment. We can see we just tagged it there before price sold off, again adding confidence to that key level that we're looking at. So as we now look at this, we now want to drop down to our daily chart. And as we can see here, overlaying the same principles, knowing we had this weekly fair value gap, yeah, when price really drove into this, our attention, or my attention, was on this. Again, we can see the nature of the two overlapping fair value gaps, a bearish one that should offer resistance, followed by a bullish one that's showing impulse move higher, showing buying. With shifting market structure, we pull back down into this, find support, ultimately move higher. Now, this is what we were talking about earlier in terms of the strength in price action, right? So I'm going to draw out our premium discount range here for this expansion leg. Right? So, done that the wrong way. Hang on. No, I haven't. For some reason it's doing it that way. We want green to be at the bottom. There we go. So the ideal retracement here was down into this fair value gap, right? But look what we said. When we've got our high time frame context, why would we maybe not have expected that one? Yeah? Because what we're looking at here is we've got this potential balance price range emerging. We see the drop back down. We see price overtake this now, right? So on a daily scale, once again, what have we done? We've set that balance price range. So let me get rid of the weekly one here. So we focus on the daily. That balance price range within there also draws down into our weekly fair value gap, our daily fair value gap, sorry. So let's draw that in. The price then expands higher. Now, once again, caution shown because we've taken out the clean highs here, but these are really internal liquidity, right? We're looking at this and then ultimately this up here, plus we've got our key level. So, once again, sounding like a broken record, on a daily scale, we also had this fair value gap here, yeah? So once again, remember, it's not that you can't necessarily take these positions. It's just that with the expectation or with the understanding, sorry, in terms of premium discount, knowing that we're kind of moving into slightly worse risk to reward territory. But obviously, again, this does really depend on what time frame that you're trading on, right? And the setups that you're looking for. So for example, yeah, as we're looking at this here, we can now see the really clean break above. Price comes back in, engages with us here. Now, this did take place on Sunday. I'm not a huge fan of trading weekends. I typically trade traditional market hours, Monday to Friday, with a focus on later London sessions and then trading the AM and PM for New York as well. So now on a 4-hour basis, if we overlay the same, we look at our 4-hour fair value gap. And let's just say that price does start to make a halt here. We notice how that's down, yeah, in discount of our range, favouring long setups. We've got a clean liquidity target above, as well as slightly higher above that. So, should price come down into here, yeah, once again, we look for our low time frame market structure shift setups and then look to target price higher up, all right? So that's what I'd be looking for ETH. The flip reverse of that, yeah, is if we come down here, yeah, and we flip this from support to resistance, and then we get our lower time frame confirmation, then the setup for me, looking short, would be something like that. I'd want to see this inverted. If we held this here, then my immediate target is liquidity resting below those lows, yeah? And on the way down, then obviously on a lower time frame, this is when we're looking to trigger our setups, okay? So in terms of triggers, and let's just use recent price action so we can show that here. What I'm looking for is price has broken above here. We see this impulse move higher. The important thing now is to see this hold. Yeah. So we see price starting to hold this. Now, we've seen our liquidity run. We've seen price drop down here. See this large wick here, just designed to take out liquidity resting below these lows. So after that, I personally like to see confirmation. Yeah. So we've had a liquidity run. I'm then looking for price to make a move above. Yeah, so a shift or a break in this case of market structure. I then like to see price retrace to a fair value gap. In this case, we have this one here, right? Now, I personally take the first available fair value gap that's in discount, yeah? But I have to manage my risk by making an allowance for these to be filled as well. So we've even got tiny fair value gaps here. So the best place I can put my stop loss is there. So my long setup would be triggered here. My stop loss has to go under this low here. Always just a few pips below, just in case you do get that little run lower. And then I need to know that price is going to get here with at least a 1.5, ideally 2R. Yeah. So that would be my first profit taking point. Why? Because there'll be stops resting above here, in my opinion. What's price done here? It's shown us strength. We've highlighted our key level that we want to see hold. Price has had an aggressive move above. came back down, run the liquidity below. It's now reclaimed and held here. Why would it be doing that if it wasn't showing strength, right? I then don't just want to jump into a trade. I want to see an expansive move higher, an energetic move higher, leaving a fair value gap, right? Then when price retraces into here, I know I've got a good risk to reward setup because I know where my invalidation is. If price starts breaking down from here and starts holding back below this, right, then we know we can favour short setups lower down. All right. So even looking at this here on this time frame, and we probably want to move just a little bit higher to say like a 15-minute, because we don't want to get too caught up on the lower time frame, guys. Just remember, don't forget to zoom out, because otherwise, before you know it, you're just giving too much weight to a low time frame chart, and then you can end up getting a little bit chopped up. All right. But once again, we got a very small fair value gap in here. We can see this is currently being balanced. We didn't have a bullish one here, but we are inverting this bearish one. Yeah. So I'm interested in this high here. And I think if price shows an aggressive move high and we hold this, yeah, again, lower time frame, we can look for that shifting structure, and then we can look to get on board with longs moving higher. Start holding back below it and losing these lows, or this low, sorry, down here, then I think price might be starting to come back down and showing a little bit of weakness. All right, guys. So I hope that's been helpful. We're going to take a look at GBP USD as well for anybody just quickly interested in traditional markets like Forex. But just before I get rid of this, let me just show you the current. So here we go. So this was the TA that we ran out last week on GBP USD, using exactly the same principles here, guys, right? Bearish fair value gap overtaken by a bullish one. Yeah, price came into here, found support, gave us the chance for low time frame longs into the liquidity resting above these relative equal highs, right? However, when price then broke down from that long setup and held below here, yeah, our theory was that price is going to clear out these lows, which it did, and then we wanted to see this hold as resistance, right? Which ultimately we got, and then we see the breakdown here in price as it starts to trend lower. Now, with price moving slightly higher, let me just move this to a higher time frame so we can see the context a little bit clearer. We have to forgive all of my test data that sits on the back of these. Right, we can now see that actually as we zoom out on the daily scale, higher highs, higher lows. Yeah. Now, something would be of interest to me here would be looking at this order block, right? So this is our daily order block, right? Our OBD. Now, price is currently being held here, right? So if I just... There is a bit of a cup and handle going on there, Hans. Yeah, you're right. So cut up a little bit overextended maybe to handle, and then maybe a little boom back to the moon. I mean, from a kind of financial perspective in terms of the British economy, I think it's probably in quite a lot of trouble. Inflation's still not under control. You know, we raised 50 basis points in the last hike when it was expected for 25. It's just not coming down. Cost of living is exceptionally high. People are about to face a lot of trouble with their mortgage renewals and stuff like that, right, in terms of rising interest rates. So it's very, very tricky. But purely from a TA perspective, if I'm looking to trade this, you see how we had this fair value gap marked out on a daily scale? Yeah. What we were looking for here when price broke above here was for it to hold. Now, if we look at this now and we see this bearish fair value gap, right, there's an argument here. We're using this, or not an argument, we are using this as a point of rejection, right? Bullish, sliced through, bearish overlapping just here, but this is the current one that we're in. So there's an expectation here for price to possibly hit this and then move a little bit lower. If it does, and it fails to get back above this, then I do think that we can invalidate this order block here and start kind of hunting down for these lows. However, this gives us a prime ready-made target to say, okay, if we do see any strength from the pound, which I'm not sure that we will, right? then quite simply, we would just want to see this area reclaimed, yeah? And then we want to see this used as a platform for price to move higher. However, I do feel that certainly for me, I've been short on this market and I continue to do so at the moment. If we drop down to an hourly, just to give us some real detailed context, what would I be looking for here? So we're in the bearish fair value gap here. We can see price came up, just nibbled a little bit above, but ultimately came back down. But when we're looking at this on an hourly scale, we can see this expansive move higher, right? So let's just hide this for a second, just to clean this up and say that this is our ceiling, right? This high here, we really wouldn't want to see price start pushing above this and using this as a base. We've got a low time frame or an hourly fair value gap in here that we can just see. That can be drawing price higher, yeah? We also have this order block here, right, which could really extend to the bottom of this candle as well, in truth, because we have consecutive candles. If we draw that out now, we do that in blue for our order block, right? If I'm looking for continuation shorts here, the moment this bullish fair value gap supporting price. However, if our higher time frame assessment of being bearish is correct, what would be nice to see is price drawing up here, right, into this fair value gap, finding rejection at this order block, yeah, and then on the break of structure, we could trade first of all into these lows and then ultimately down into here, all right? And that's certainly what I'd be looking at here. We've had this expansion higher, right? We got this on Friday, this relief rally, right? But also we got to remember we've come into a major order block here. Yeah, this can be people taking profit. We can see once again, although this one was probably a little bit too large to really be helpful in terms of making the play, but how we came into this bearish fair value gap, overtaken here. We didn't get the bullish one, but we do see the expensive move higher, which sets our base for higher prices. But at the moment, if we get rejection here, I feel like we come lower. If we get acceptance back over here, yeah, then we've got to ask ourselves, why would it be showing strength here when it's already been rejected here before? Yeah, so we could be looking for higher prices. But at the moment, I'm favouring a breakdown here for continuation lower. All right, guys, we slipped a couple of minutes over. Quick question here from Seb. How long is it helpful to keep these bullish bearish inverse fair value gaps on price? Does price continue to respect these levels forever? And not how I use it, no. So typically, let's just say for an example, we see this one here, right? Now, I would give this more weight if there was another bullish fair value gap in here, by the way, as well. But we did have this big move higher above it, right? We had this expansion. So now we've got this bearish here. Come above it here, I would look for this to offer support the first time that we come into it, yeah? If price rips through this, yeah, then I would be saying, okay, if we rip through this and we lose it, then from there it loses its validity for me, because I would then be focusing on more recent price action, all right? So just trying to give an example here of, let's just for argument's sake use this bearish fair value gap, right? We can see we had the same thing. We expect that to support price in terms of reject it. It doesn't. Price comes up and holds this now and moves away. Now, we've had so much other price action develop over here. I'm not going to keep this on the chart and then move it all the way across to here, right? Although you can see that there's relevance. The problem that you've got is you don't know, is the relevance from that or is the relevance from the order block that was here, from the fact that this was the small consolidation before price pushed away. So what I would do is I would always have your high time frame bias, yeah, and then I'd be looking for recency in terms of your fair value gaps and order blocks that you're using, unless you've got a really clear and obvious level that's, suppressing price, right? Now, another thing that we can do in here, if we do see price break down from here, is we're looking at this to be the fair value gap that's supporting price, right? So once again, this is our most recent fair value gap. Another way that this could play out is price slicing through here, returning to here, lower time frames again. We look for our break of market structure, and then we can very first of all target liquidity resting below these lows. Yeah. and you can get a nice trade. You've got clearing validation, and you just want to make sure that you get a good risk to reward setup as well. All right, guys. Look, thank you all for soldiering away. Most of you stayed here. We had loads of viewers on today, which was awesome. Some brilliant questions coming in. Brilliant to see some old faces. Amazing to see some news ones as well. Hans, brilliant to see you on here. Ray, welcome. I hope you enjoyed it, as well as Colin. Obviously, Touche, my friend as well. Nitpar. So many legends on here today. Mr. Eam, who's a really good friend of mine, fantastic friend of one of my best friends in the space, Trader Dank, and part of his Discord as well, which is a legendary place. Yasir, thank you for your time as well, my friend. Seb, obviously. Moral, saw you sneak in there as well, Yakuza Kana. Erica, lovely to see you on there. Bram, good to meet you. Myth as well. Johnny Rico, John McDonough as well. TXC. Nitpar again back in there for the win. James 14. Goncalo as well. Saw you sneak in there along with Whack. And anybody else that I've missed. Brawl, you absolute beauty. I can't believe I missed you saying hello then, unless you just put it on there. Brawl is a wonderful friend of mine, of the stream, a big supporter, and just one of the finest fashion designers anyone could come across. Actually reached out to sort me out some threads and a really nice setup for when I went and joined Dank, and we went to see the Man City, Real Madrid semi-final. So endless thanks for you, my friend, and for everyone as well. Wishing you all a fantastic week ahead. We're going to be live again on Wednesday. We're going to do some alt requests, look at some bits and pieces. We can always cover Forex, traditional market assets in that as well. So let me know anything that comes up for them, and we'll try and really rip through some as well. Yeah, but for now, GBP USD as well as Euro USD. I'm watching these key levels to see if we can break down further. Apart from that, on crypto, let's see what triggers we get. We're coming into the beginning of the New York session shortly, which I think is going to really have something good for us. So thank you guys so much for joining me today. I look forward to seeing you on Wednesday. Have a fantastic week ahead.